As you can see, this one here is a counter trend. You can clearly see that this is the high, and there is an inducement here, of course. Yeah, the inducement takeout, I mean, that's the high, and you can clearly see that's the next high after price has taken out the inducement. And also you can clearly see the major inducement break. Of course, this here is not the perfect counter trend sell, but this one here is the good one, I mean the good counter trend sell. And you can clearly see our trading range is probably this one, and of course we'll be selling until price achieves to the either the decisional or achieves the inducement. In that case, the higher time frame inducement. We may never know, maybe this is the higher time frame inducement. I will not shift to the 4 hours so that we can identify the higher time frame inducement, but I can clearly see that there's a possibility that this one here will be the higher time frame inducement. Maybe now price has mitigated the SMT, and you all always know that the higher time frame SMT will just give a reaction probably to the lower time frame supply zone, and then after that, of course, price will continue lower until price takes out the inducement. Will we now consider using the pro trend? But currently we are actually on, counter trending. But that's not important. What's important is actually us identifying the current trading range, and of course mark our POI. And since this is the 15-minute, this means that I'll be using the 15-minute as my higher time frame. All right, so right here we can clearly see that all right, let me make this strong, but anyway, let me just use the brush. All right, so exactly right here, like I have showcased the inducement, this one here is the break. So this means that we are currently in a new trading range, with this one here being the inducement now, in that case major inducement, and price retraced, broke past the break of structure while maintaining this high. So this means that this one here is our trading range high. You can clearly see this high is maintained. If price broke past this high, then of course this one here will be a change of character, and that will make things, of course, not aligning with the trend. But we can clearly see that the major inducement here is taken out. Of course, we confirm this one here to be a swing point, so we are actually waiting for price to break past it while maintaining our previous high, our previous trading range high, and we can clearly see that high is protected. In fact, price came and mitigated this order flow. Is it an order flow? Is it a sweep of this, or is it an order block? Whatever, this supply zone in that area, and I can clearly see it gave the ultimate reversal towards the downside. All right, so right now we have our trading range, of course, ranging from that high all the way to this low, but we have yet confirmed if this one here is our trading range low. And how do we confirm that? After price takes out, of course, the inducement. All right, so we have our trading range high and we have our trading range low, and right now I'm interested with the identification of the inducement. So this here is our trading range, the trading range high, and is this here the trading range low? Let's see. Right, so I have identified those areas, and I want to see if this one here is an inducement. Is this one here an inducement? No, we can clearly see all of this price action is happening inside this bearish candlestick. You can clearly see that. Let me make this, or let me just leave that color. You can clearly see all of these. Whatever was happening here, the consolidation was happening inside this bearish candle. This means that we ignore all of that price action, and we just consider this red candle and this single bullish candle that took out the liquidity resting below, or took out this previous bearish candle low and broke, closed above. You can clearly see that. So this means there was some interaction of news somewhere here. All right, so now where is our inducement? You can clearly see our break here, and this candle broke past our swing point with a wick. So this means that our trading range, our trading range inducement will of course be this one here, because that's the valid pullback, the recently formed valid pullback. So that's our inducement. So this means that any POI that is formed before this is what we call now the SMT, and you can clearly see this reaction probably because of this SMT. Anyways, we have identified our inducement. So right now I need to wait price to take out that inducement. The reason is why is because you can clearly see that if I mark this order flow, you can clearly see that this is the order flow and price is actually on the order flow, and you can clearly see the reaction. Also, we can clearly see this order block right here, this order block of which price is currently reacting from. So you can clearly see these reactions. They are not like the perfect, the correct reactions. Yeah, that's the correct word to use. These are just there to lure the early sellers to get into the market so that price can just get them or can just grab that liquidity. So right now price is just engineering the liquidity, and so we are smart enough to identify that this one is a SMT or a smart money trap, and we will need to wait for price to take out the major inducement before we can now mark our good zones. I mean our best zones for us to take the POI. I mean for us to take the reversal entry, of which we know our zones. There are only two: the decision POI and the extreme POI, and they are all present on the same trading range. Right, so exactly right here, let me run price. All right, so you can see price gave the reaction nearly breaking past this low, but it didn't broke past that low. You can clearly see price came nearly right here. You can see if I just draw a line that aligns with the one that I marked on the previous, you can clearly see price has yet broke past this low. So this means that whatever is happening here, I'm not interested in that until price takes out our inducement. So I will continue running price and see what price does. Right, as price interacted with the inducement, exactly, you can clearly see that price has swept the inducement exactly right here. So we say that once that happens, we usually shift to the lower time frame. So of course the 3-minute for the 15-minute, and where is our, this one is our change of character. So let me continue running price. All right, I don't want to, yeah, exactly right here. And if you clearly remember, I said that we usually mark this high, and if this high is, you can see price has closed past that, or like not closed but broke past that with a wick. But anyway, something interesting here, price made a change of character, and since this here is a sweep, then we will need to wait for an inducement before I can actually make that perfect sell after the inducement is made. So if price does not create an inducement, I will not make a sell here. Alright, and price didn't created that, so that explains me why that sweep was not valid. Alright, so I will get back to the higher time frame, of which I was using the 15-minute as my higher time frame. Alright, so exactly right here, let me get rid of the rubber, and back to the M15, we can clearly see now price has taken out the inducement. Everything is good, and right now is the moment to mark the POIs. Alright, so right now I can clearly see that our trading range has no POI on the 15-minute. I don't see any valid POI here. I don't know if you do, but I don't. You can clearly see that this one here, this here was the extreme order block. Of course, if I start with the order flows, you can clearly see with your naked eyes that all the order flows are mitigated. Yeah, of course, we usually start with the order flows, so you can clearly see the first order flow mitigated, coming on to the next mitigated, coming on to, all right, I need to make this stick so you can see mitigated, coming onto the next order flow also it's mitigated. So you can clearly see our trading range has no any valid order flows, and the only option that you're left with is the secondary option, of which is the order blocks. Starting from the extreme, I can clearly see this extreme candle is not associated with a fair value gap, and of course it's also mitigated. Coming onto this next one, which is associated with a fair value gap, we can clearly see it's also mitigated. So, and I said that this one here is an SMT because it came before our major inducement. So this reaction here, even though it was a pretty good reaction, but you can clearly see this was just here to induce the early sellers. Probably this here was a re-entry. So for for the sellers. So just price to, you can see all these stop losses. Probably there is some traders whom you are also waiting for a sell of this trend line liquidity. You can clearly see first touch, second touch. Probably they're waiting for the second touch before they can sell, but then price can see strike through. So all of this was here so that price can actually create that liquidity. So this one here was just a smart money trap. So the first trap was for the smart money traders. The second trap you can clearly see for the retail traders with these trend line liquidity and all of that. So all of that is just liquidity, but we usually get rid of that by actually making sure that the inducement is taken out. All right, so there is no any valid order blocks on my trading range. And what's the other thing that I am supposed to do, or where I can now know that price will actually, or where can I know where price will mitigate or where price will make its way towards the, like, mitigate and make its way towards the external liquidity. All right, so that's where now I usually shift to the refinement time frame, where now I check for the hidden POIs. So since this is a 15-minute time frame, I will be shifting to the 5-minute and use it as my refinement time frame. If this here was a 4-hour trading range, I'll be shifting to the 1 hour and use it as my refinement time frame. Same with the daily, I'll be shifting to the 4-hour. So since this is the 15, I'll be shifting to the 5-minute and use it as my refinement time frame. All right, onto the 5-minute, we can clearly see here that I can get this beautiful order block here. Very beautiful order block exactly right here. So that's our extreme without even thinking. And this here is obviously the highest probability. And luckily, it's accompanied with a liquidity takeout exactly right there. So this makes our zone very strong. And another thing, we can clearly see that this here is the pullback right before our zone. So this means that the buy side liquidity resting above this pullback is what we usually call the engineering liquidity. And we say that the engineering liquidity, just like the inducement, is actually a core liquidity, and if price takes it out, or yeah, of course, sweeping that buy side liquidity or that engineering liquidity, there is some high chance that price may end up reversing all the way, or may end up making that ultimate reversal towards the external liquidity without interacting with our higher time frame, I mean extreme POI. All right, so there's that one. And also I can clearly see that we say that this POI that comes before the inducement, that's not valid. And right now I cannot see any other POI. You can see even my refinement time frame is not giving me any POI here. And I can also not, all right, there is a POI here, but we usually don't consider such a thing, yeah, because of this inducement. So I will not have myself marking the POIs present below here, and I'm only interested in the ones that are happening above here. And this here is my hidden POI, and this one is of course the engineering liquidity. I don't see any other POI here, so I'll be shifting back to my 15-minute time frame. And exactly right here I have my hidden POI, and this one here is my engineering liquidity. And pretty nice, we can clearly see that price has taken out or has swept this one here. The sweep, I explained these sweeps. I said that the sweep can be by a candle close, I mean a close above this, I mean above the buy side, but the next candle needs to dip down. And also another thing, even if price breaks past that with a candle closure, the candle closure needs to, I mean the body that breaks past that, the displacement needs to be nearly like very small, like very small, not like a huge displacement. You can clearly see price displaced, like you can see like where price like closed something small. But let's say now price closed, I mean this bullish candle closed somewhere there, or let's say somewhere there. You can see like the displacement from this engineering liquidity is very huge, and this can already signal that that's a liquidity run and not a liquidity sweep. But right here you can clearly see the displacement was very small, and also the next candle came, like the next candle gave that rejection towards our favor. So this means that there is a possibility that this one here is an engineering liquidity strip. And like I said, the engineering liquidity is a core liquidity, and if we see a strip from it, then there's a possibility that price may make that ultimate reversal without interacting with the higher time frame. I mean, without interacting with the extreme POI. Alright, so exactly right there, you can clearly see that the sweep, but how can I confirm that? Of course, by using the reversal pattern. If I am to trade using like the direct entry or using the same time frame, of course, but right now we are actually into the top-down analysis, so that's where now I'll be shifting to the 3-minute, and of course the same process applies. So here is our major inducement. You can clearly see that our major inducement is exactly right here. And all right, guys, so let me shift back to the 15 so that I can prolong this external liquidity. All right, let me use a straight line so that I want to prolong this line all the way here. All right, that's great. So now we can shift back to the 3-minute, and I know where the higher time frame external liquidity is, and exactly right here, this is where now our change of character is. All right, so let me run price. All right, price is all right. So you can clearly see price reacting from this order flow. So that's a supply zone. So we said supply to demand, that's a flip zone. So that's a supply, and let's see price going. All right, so I can refine that to an even better zone, exactly right here. So now I'm refining the order flow to just a candle, so to just that part, of which they called it an order block, but since we have interacted at a higher time frame POI, this is now an SMT. It will not hold a mean price even if it has taken out an inducement exactly right here. So this means that this here is a strong low, but it will not hold because it has interacted with a higher time frame POI, and price has grabbed that. So even if this, let's say price, we don't know, price may actually make that move and invalidate this sweep, but I cannot gamble on this trade because I can clearly see that there is this red flag here, the higher time frame engineering liquidity. Even if this is a great trade, I clearly see all of this. And also another thing, you can clearly see here there is no any inducement, so this one is the major inducement. So even if I was taking a buy, I will still not take the buy from this zone. I will still wait for price to grab this major inducement before now I can take that ultimate buy. Alright, so anyway, that's not our context here. Our context right now is actually price making the reversal to give those early buyers, to induce the buyers to take the buying and later stop them out and price make the real move. So right now we can see this is just a supply zone. So it's just a supply zone, and all right, let me continue running price. You can see price made that. So where is the demand zone? The demand zone is exactly right here. So this demand zone is what we call the flip zone. So you can see supply to demand. So exactly right here, this is what I call the D. So S to D. So this is what we call a flip zone, and another flip zone is of course D to S. So supply to demand, that's a flip zone, meaning now price, yeah, just know that that's a flip zone, and a flip zone is a very high probability entry, and demand to supply, that's another flip zone. So yeah, guys, this is D and this one is S. I'm sorry, this one is D and this one is S, but the context still remains demand to supply. Of course, I'm sorry about that. Alright, so right here we can clearly see that price has done that, and even if that's a flip zone, I will not be selling from that flip zone even like until I see that price has created an inducement, because you can clearly see right now this is the inducement. So I'm not interested for a sale right now until I see price has created an inducement, and exactly right here price has created that inducement, and that's now where actually interested to take the sell from this supply zone, and we can clearly see that this here is our order flow. So of course price will reverse anywhere on this order flow, and this flip zone gives me that feeling that price may reverse from that place in this order flow. Of course I can clearly see that there is no any other order block upper here except this. There is no any other order block because this red candle, you can see it's mitigated coming onto this, it's mitigated. So let me use this so that you can clearly see that this mitigated coming onto this mitigated, this mitigated, and we are only left with this, of which it was demand to supply. That's a flip zone, right? So, and also we can clearly see that this one here is what we call the order flow. So instead of me actually taking an entry of this order flow, placing my entry there, my stop loss above there, I can be sharp and do something like this, get rid of this order flow, because I know price will reverse anywhere inside that order flow. And of course I'll be taking my entry exactly right there, and my stop loss, of course, it will be there, very conservative. Even though I know some will make it there, I will not recommend it. I will obviously do that so that I can be conservative, and of course I'll be targeting this area. So exactly right here, that's the area to target, and that will give me a 2 point. All right, that's not bad. That's a 1:2. A 1:2 is a good risk to reward. All right, so let's see what price does. Exactly, price has taken out that inducement, and all right, this here is the inducement. You can clearly see that's there, that's the inducement. But anyway, that's the order block, and price has, all right, price has not made it out to the area. You can clearly see right there, price has yet made it out to that area. So this means I will miss that trade. I don't know, maybe price will reverse, but price made it out right there. So you can see I missed this trade. Yeah, I missed that trade, of course, right there. So if I had taken all of this buying move all the way from here, maybe I would have gotten that, but that wouldn't make any difference with me actually using the extreme order flow. Maybe if I use the extreme order flow, I will get a risk to reward that is very, very small. But at least I've given you something that you can consider. Maybe this time I was not, the price didn't trigger the entry, but maybe next time price will. So, and after all, the risk to reward here was very small, that is 2 point something. So you can still capture this next entry, which of course you can see that you can see the break here, and this of course will be our high, and where is our inducement? All right, our inducement is this one here, our minor inducement. So let me continue running price. Price created our major inducement exactly right here. So this means that I will get rid of this. Let me get rid of this and continue running price. Yeah, of course price is heading up. Price has taken out this. All right, let me do this. Is this a sweep? All right, I will not risk on this because this is not like a perfect sweep, so I'll still be waiting and see. But price has already taken out the inducement, so I can mark my POIs. If I mark the order flow, of course the order flow is mitigated, so I'll check the order block, and I can clearly see this candle. Yeah, exactly right here. You can clearly see this candle of which price has yet interacted with. You can see it's not mitigated. The reason is why I'm picking that candle is because this bullish candle is already mitigated, and the candle that I'm left with is that one. So right now, if price mitigates this, I can now take the entry, of course, there. Of course, we know you can place the stop loss here, but that's aggressive. So best stop loss, of course, right there, and you'll be targeting your zone exactly right here. You can see the risk to reward. It's a 1:2. So yeah, it happens sometimes that the external liquidity is very near to all of these, and you'll be getting small risk to reward. But at least that's better because instead of you actually getting this risk to reward of one trade, you can actually get it off number of trades. So right here you can clearly see price mitigated our zone, and you can clearly see it's actually making that move to the downside, made that break of structure exactly right here. So this means that we are continuing good. So price has mitigated the order block, made a break of structure. So this one here is our new high, and the process of selling, of course, continues. I said that the process of selling will continue until price makes it out to the higher time frame external liquidity. All right, so here is the inducement. Of course, I can clearly see this here is the inducement, and in that case minor inducement. So let me continue running price. All right, is this an inducement? No, it's not a valid pullback, so I'll still continue running price. And exactly right there, price has made that closure. So this means that this here is our trading range low. This one here is the major inducement, and this one here is our order block exactly right here. That's our order block. In this case, I don't see any order flow because you can clearly see that this order flow is mitigated exactly right here, and this order flow that comes before this inducement, we said that that's an automatic SMT. So you can clearly see that in this case I cannot use the order flows, and so I'll be already shifting, automatically shifting to the order blocks, and you can clearly see I mark that order block. But remember, this order block is not like the higher probability reversal. The higher probability reversal is the sweep of this major inducement. You can see our trading range involves a minor inducement. So the sweep of this major inducement will make the reversal strong. I mean the strong reversal. So someone else, if he or she wants to take a sell limit order, of course he will place something there and place their stop loss above there. But this is risky because we don't know how far price will wick above this area, because price can wick with like a long, you can see a long wick, and probably you may place a stop loss there, but the wick may make it out to this SL, or maybe some few pips before that SL, and maybe your broker has large spreads, and you may find yourself, you see, like stopped out of the trade, even if price has yet mitigated your SL. I mean, triggered your SL, but still you're out of the trade because of spreads on your broken stuff. So you'll have to extend it further, and maybe price may just sweep a little bit here, and you can see that buffer that you have left. So I would just prefer you to wait for the major inducement sweep rather than just guessing where you will be pressing your SL and stuff, because you can clearly see if you place something there, and let's say there, of course this sounds reasonable, you just say like there's no way that that week or that sweep will make it out to this SL, and probably you will be aiming for this low as usual, and you can see that's a 2 point whatever, or maybe now price just tweaks a little bit. You can see now you have spotted a 3.56. Now let's say price now sweeps, I mean you just wait for price to sweep this area. So let me do that. Right, so you can clearly see this is not a sweep right here, so I cannot say that this is a minor inducement sweep, and of course a minor inducement sweep is not a strong rejection. I mean, that's a minor inducement, it's less impactful, even though it's valid but less impactful. It's not worth it for actually taking the trade, and yeah, it will force you to actually use a big stop loss, and we don't want that. We just want small stop loss and very safe, such a way that we can now spot a good risk reward, but at the same time we are conservative. That's what we call the precision in True SMC. All right, so price did that, but then later you can see came like some few pips before there, but then price continued up and up. You can see it didn't give any reaction from that uh, from this supply zone or the bearish order block, and right now I am waiting for a sweep of this major inducement. So let me draw a straight line here so that you can clearly see the sweep in advance. All right, so exactly right there, that's the major inducement, and yep. So let me reduce the. All right, so exactly right there, you can see a strong sweep, very strong, and we can clearly see, since you're using the same time frame, you can see price printed a nice evening star pattern there. I can confirm that by this using this whatever placing the body whatever there of this bullish candle, and you can see that third candle closed 50% of this bullish candle, and we say that's what confirms the the evening star. So on closure of that candle, I'll be placing the entry. Stop loss, of course, I can even make it tight to that high exactly right there, and I'll be aiming, of course, this area. And you can see I have spotted a nice entry with my stop loss very safe, and you can see the risk to reward, insane risk to reward. So you can see this now, it's actually the best of, even though we don't know if price will make it out to sweeping the major inducement, but look, if you just waited for the major inducement, you would have spotted a such good entry or the good risk to reward, instead of actually guessing of price just or placing your stop loss there, yeah, because of the sell limit and stuff. So this is what I'll be recommending, yeah, when you see such a scenario. You can clearly see, as usual, price will do that because we have our higher time frame aligning with our lower time frame, and that's the greatest part of top-down analysis. And exactly right there, price, you can see price shoot up, and yeah, exactly right there, price shoot up, and it's doing like that, but I'm not interested. You can see the reaction is like that and all of that, but better price made it out to the full TP, and yeah, exactly right there. So you can see your first entry was right here, of which gave you a small risk reward. This one here was a, you missed this entry, but let's say you used the order flow, which it was the entry that you were supposed to use. I just refined it so that I can capture a risk to reward that is, of course, meaningful, or a risk to reward that is good. Of course, if you do something like this, placing your stop loss, above there, and SL below here, you can clearly see that this will give you a small risk to reward. Let's say now you use this small order flow, that's a small risk to reward. So you can see using this one here will give you a reasonable risk to reward, that is a 1:2, of which is, of course, now the, something above 1:2 is obviously a good risk to reward. So you can see I will have done that, and you can see some few pips before that, and price just left me and made that break of structure. So this is a missed entry, this here is a good entry, and of course this here is a great entry. All right, guys, so this here was a short session, but at least it had something to learn of. And yeah, so I'll be ending the session here, and yeah,